So you're likely wondering, like a lot of people, what's happening with the Canadian housing market? When's it going to maybe turn around?
Yeah, it's the big question on everyone's mind, isn't it?
Definitely. So for this deep dive, we looked at a report trying to connect the dots, immigration, global money, supply problems, the current economy, all that.
Right. Trying to get a clearer picture.
Our mission basically was to see if we could pinpoint when a real rebound might actually start.
And the main takeaway.
Well, the prediction seems to be a sustained recovery starting maybe late 2025.
And late 2025. Okay.
Yeah, and then really going through 2026.
And what's driving that time frame?
It seems to hang on a few key things. Affordability getting a bit better, the worst of the mortgage renewal hikes being over.
The payment shock easing off.
Exactly. Plus, continued high immigration and just not enough houses being built. That persistent undersupply.
It's interesting how those things weave together. Like immigration, it's not just more people needing places to live.
What's the nuance there?
The report really highlights the concentration. Where are newcomers settling? Mostly big cities,
Yeah,
right?
typical.
Places already struggling with, limited housing stock and infrastructure. It creates a real bottleneck.
Okay, so it's demand-focused and specific pressure points. And it's not only local income driving things either. The report mentioned global capital.
Right. International investment plays a role too. It can push prices up sometimes, kind of separate from what local salaries might support.
Like external money looking for a safe haven here.
Sort of, yeah. And that adds another layer of demand, tightening the market even more.
So these big structural things, the steady demand from newcomers, international cash, and the difficulty building quickly in cities.
Exactly. They've made the market really sensitive. Even small changes elsewhere can have, well, pretty big effects here.
Okay, let's dig into that 2025 recovery idea. Affordability improving, how does that actually happen?
The big assumption there is interest rate cuts. Anticipated cuts, anyway.
The Bank of Canada.
If rates come down, even a bit, it lowers those monthly mortgage payments for new buyers and, importantly, for people renewing.
Right, making it affordable for more people. Opens up the buyer pool a little.
Precisely.
And the report mentioned the mortgage renewal peak passing. Why is that significant?
Think of it like the period of maximum pain ending for a lot of homeowners who renewed at much higher rates.
Okay.
By late 2025, the bulk of those really sharp payment increases upon renewal should be behind us.
So less stress driving people to sell, maybe? Fewer forced sales?
That's the idea. It could mean fewer homes hitting the market under duress, which helps stabilize the number of listings.
Gotcha. So less chance of a sudden flood of houses for sale pushing prices down. And meanwhile, you still have strong immigration keeping demand high.
Exactly. The forecast assumes immigration levels stay pretty high and, again, concentrated in those urban areas with tight supply. It's consistent buyer pressure.
Demand meets limited supply. The classic story.
Pretty much, yeah.
And then looking further out into 2026, there was something about international investors potentially coming back more strongly.
Yes, there's an expectation that some of the foreign buyer restrictions might ease around then.
Oh, interesting.
If that happens, you could see another wave, maybe smaller but still significant, of international capital flowing back into Canadian real estate, adding more fuel to demand.
So putting it all together, the picture is this gradual shift starting late 2025, recovery building into 2026.
That's the core prediction, yes.
Okay.
But, and this is important,
It won't be the same everywhere.
definitely not. Canada's huge, lots of different local markets. The timing will vary.
The report called out Toronto and Vancouver specifically, I think.
Correct. Those major centers, high immigration, chronic supply shortages, they're likely to feel the recovery first and maybe most strongly.
Because that supply-demand imbalance is just so pronounced there.
Exactly. The fundamentals are really stark in those cities.
Okay, so summing it up. The forecast points to the market moving from stress towards recovery, kicking in late 2025. Key drivers are better affordability, steady demand, meeting low supply.
That's the essence of it.
And if you're listening from a big city, especially one seeing lots of newcomers and not enough building, you might see this shift happen sooner and more clearly.
Yeah, that's the expectation, which, leads to a thought for you, the listener.
For one.
How might these predicted shifts affect your own plans, your housing decisions, or even just how you think about Canada's economy going forward?
That's a good point. It's definitely complex with real impacts for people.
It is. Lots of moving parts.
Well, thanks for taking this deep dive into the housing forecast with us. Definitely gives you something to think about for your own community.